Hi everybody, welcome back to Don't Get Left Out in the Cold. I'm your host, Michael Norris. Today I've got a guest in that's a financial expert. His name is Richard Jones. Welcome, Richard Jones. His company's called Pilot Fish, and he's going to be giving us some useful information today. So, Richard, one of the things I want to ask you about today is why would somebody like me get a financial director, and what value would he bring to my company at the status we're at?
Okay, good. Well, thanks for inviting me along today, Mike. It's glad to be here. Well, as you know, I'm a finance director by background. I've worked in finance all my life, had a number of big roles within some big companies like DGLITC, Thomas Cook as finance
big
roles,
names.
so big names. Started my working life with KPMG, but I've always done sort of corporate finance.
What was a KPMG?
KPMG was at the time the largest accountancy firm in the world. So
right.
I trained with them. So you get some good training, do some audit, and you do. Well, I actually specialised in acquisitions and mergers and structural work.
So is that for like people that don't understand it out there? Is that like somebody who wants to buy a company or sell a company?
Yeah, I'd advise them on that.
Got it.
Yeah. And then I followed that through. So actually my roles have always been about structuring companies, building companies, acquisitions, debt finance, and everything related around it. So did that through Thomas Cook, DGLITC, then a company called Anglia Co-op in Peterborough, which was a very large retail company, 700 million turnover, had to be restructured and do that.
A bit of pressure then, yeah.
Yeah, so, interesting stuff. And I've been running Pilot Fish for 12 years, which focuses on the SME market, helping businesses to grow, whether that's through providing advice as a sort of part-time finance director or raising finance, and I raise finance for businesses and property developers along the line. So coming back to, I've got that experience and see a lot of the time, to answer your question, businesses of your size struggling along without good financial steer.
Yeah, because we're in the forest, aren't we?
We're
in the forest, and I get that.
Well, let me backtrack. It's just sort of point out two things first, so people understand what finance means to me and what it can mean. There's accountancy, and I think there's finance, and there's different sort of roles and skills within that. So your traditional accountant on the high street, someone you'd come along and do your monthly accounts, they use things like Sage and Xero. They're very much compliance based. So they're there to make sure that your accounting records every month are correct. You've posted your invoices, you've posted your VAT returns, you do your annual tax returns, you do your annual accounts. So it's compliance. And that's an important job, but it's a job that you probably feel is just a pain. You want to tick the box,
Yeah, it's like because it's boring, isn't it?
And you want to do it for as cheap as you can.
Which is probably not the best thing.
And a lot of accountants will say that they do more than that. They try to be your business trusted advisor. And they do try, but let's be honest about their model. Their model is one of getting lots of clients churned through compliance as cheap as possible. So they're not really going to have that opportunity to spend time with you, understand the business, your plans. So where the more the finance director comes in is, well, there's a stage before that. You've got those accountants in your business. You might have a accountant in your business or a financial controller who does that sort of compliance and feeds it to the external accountants. Then there's a step up from that, which is the finance director, chief financial officer, call it whatever you want there.
The title.
Yeah. Now, for me, that's someone who can really be your trusted partner and give you advice on where your business is going, not where it's been.
So keep you sort of like, I feel like sometimes I'm a bit delusional. I think sometimes as a business owner you are, because you don't necessarily make the right finance choices. You make the right choices for what you feel with your relationship, because the business is almost like your sibling.
I think you've been unfair calling yourself delusional.
Okay.
I think you've got entrepreneurial spirit. Yeah. You've got spark about you. You want to take risks. You want to get on. You don't want to wait for everything, do you?
No.
You want to get on. You want to build that
go,
business,
go,
right?
Yeah.
And there's nothing wrong with that, because without those entrepreneurs, none of these business will happen. All the risks get taken. So the job of the finance director is to maybe just be your counterbalance.
Yeah.
Not to stop you.
Maybe your yin and yang.
And just to say to you, mate, have you just realised that if you do this, it has a consequence, and that consequence might be bad cash flow. Could be something else. It could be that it puts too much risk on your business. You might choose to ignore that finance director, but you've at least taken a steer and a sounding. And what I've always, we've all got roles in life, and we all have different skills, right? Very rarely do you find a finance director or CFO who's a very good CEO.
Got you.
Right?
I suppose, yeah.
And I know my person. I've always positioned myself. I always say I'm a strong number two. So I've worked with a lot of great entrepreneurs. The guys at Travelex sold their company for £1 billion. Okay, but they needed the finance support behind them. Yeah, they needed the support. And the Anglia Co-op, the entrepreneurs are building the retail business, but they had no idea. They got the position of the company was going bankrupt when I got there, right? But they didn't know that. They were just busy selling.
Yeah.
And I've
What
worked.
happens with a lot. Sorry to interrupt you. I think that's what happens a lot, because I've done a few podcasts with different people and spoke to people who have businesses, and they've not been monitoring that cash flow. The importance of what you said right at the beginning is, I mean, we'll go into what happened to me later on, but it's very similar where you're selling. You're seeing that, oh, I've got loads in the bank, but how much money do you actually own in that in the bank?
Well, you've got to anticipate both problems, but also good things. So one of the jobs for a finance director or for me is, can you crystallize your turnover, your good ideas, your efforts, and actually convert it into profits and wealth for you? Because that sometimes doesn't happen.
Is that where they get the phrase "busy fool"?
Busy fool. Yeah. So I'm convinced 9 times out of 10, if I'm working with people, if you've got the turnover, we can do something to make it work and become, and therefore that converts into wealth. And that, whether that's through annual profits, dividends, growing the value of the business, selling the business, because that's a long process. And I know we'll talk about that again later, but that's the role. And it's an expensive resource, potentially, for some people, which is why over the last 10 years, there's been a big uplift in what's called part-time finance directors, where you don't need to employ a finance director £100,000 a year. You can have one for 1 day a month, 2 days a month, or grow with you.
A bit more like a consultant, perhaps, that, so they're not actually doing it all the time, but they're just specialising.
Correct. Yeah. Yeah.
Because I guess they're not cheap.
No,
to have,
and you've got to make sure you get the right one, because again, ask the right questions to know if you're getting the right. There are people who are financial controllers who are very, very good at putting in systems, controls, make sure your books are okay, but they're not very good at thinking strategically. And then you've got people who hopefully can think.
A visionary, sorry, because I find it really interesting. A visionary for financial is almost a visionary of the figures and the numbers of where they're going.
Yeah, that's
I'm a visionary of bringing sales in, doing that sort of stuff, the fun stuff I call that. Yeah. Whereas the stuff that you do is probably the most important bit as well.
This might be a great time to give you an example to illustrate this, okay? And it's a real example. So when I first got my job at Anglia Regional Co-op, bear in mind it was 600 million retail turnover. It owned department stores, funeral homes, food stores, furniture stores. So it was big business. It was a co-op, so it was a different structure. But the chief executive at the time, who was about to step away and retire, my first board meeting was in a dark room, 15 people around the boardroom. He pulled up a slide of maybe 20 stores, had a little red ticker, as you do, and he was pointing this red laser at the screen, shows my age a bit, and he went, Biggleswade, last month we did 1.4 million turnover. Previous month, 1.35. He went through the whole stores like that. By the end, there was about 10 people were asleep. I was sitting there going, what? What's going on? My turn next month, I turned up. I presented a 3-page finance director summary. They said, what are you doing? What's this? I said, it's my written summary. Where's the numbers? I said, read this paper. And you know what the conclusion of the paper was? The company had less than 6 months left because it had some debt covenants, cash flow issues that nobody had ever spoken about at all at any meetings, and they weren't actually going to be there in 6 months. And I didn't know that when I got the job.
I think that's insane, isn't it? Because...
And that's the difference between just looking at some numbers but actually truly understanding them.
It takes time, doesn't it?
You've got to understand the business and how the numbers, do they relate to the business? Do they relate to what you see? I had another client, and I'm not going to name this one, but he was just a client, very, very nice guy. He was dyslexic, actually, so we relied on his advisors.
Oh God, I know all about
that.
Yeah.
Okay. And he asked me, I went in there to do a job because he came to me and said, I need you to raise me money, a couple of £1 million. I want to grow this business. We're doing really well. I've got £1 million turnover, profit, 17 million turnover. I was there for a few days looking over the numbers, and something just was not, I couldn't get my head around it. It wasn't working. It wasn't right for me. The cash, I was doing a cash flow, and the cash was going down, but his profits were going up. That doesn't make any sense, does it?
No.
To anyone. But he was paying accountants 20 grand a year. He had an internal accountant. Within a week, I sat down and told him, your numbers, you're not making £1 million profit, you've made £1 million loss. They'd missed some entries, invoices that were left in drawers, big invoices, and they'd been accounting things wrong on the balance sheet. All of a sudden, my job wasn't to raise in money for growth, it was to save the company, and it took about... I had to put an emergency plan in with the banks about a turnaround plan, because as soon as they knew the truth about the numbers, they wanted to pull the plug. I had to refinance him very quickly into a temporary solution, get all sorts of things done. We took out staff, we rearranged. So with it, the business was there. It was a cracking business. Within
human error.
It was, but he was that close to have gone under, to be honest. And within 15 months, we turned it around, £1 million profit, and sold the business for $3 million.
It's amazing, isn't it? I think a lot of...
That's the difference. Yeah. That's what I'm trying to say about the difference and why you need that value. So yes, are good people expensive?
At what stage would you say we need this financial advisor? So like, we bounce around about £1 million plus in one of the businesses, which is the plumbing and heating company that I own. So is that about... What I'm trying to say is to actually afford that amount of money, depending on the type of business, I would say you can probably manage your business up to about 600, 700,000 yourself, but then it gets really overwhelming.
Yeah, I think it's possibly about what your personal goals and ambitions are. If you're happy at $1 million turnover, you're happy with the profit, you're just taking the money out of the business, and you're happy you got financial control, okay. But if you want to start seriously looking at how do you scale a business, how do you go to the next stage and all the challenges with it, you're going to be so busy managing staff, recruiting staff, getting the next team. You need to, what's the structure? What is the end goal? Thinking 3, 4. For someone like me who's done it, I think I lost track. I tried to count them up the other day. I've done about 70 acquisitions now, for either as a finance director or working with clients. So you've seen all ends of it. I've worked as an FD where I've merged business together. I've sold businesses. So having someone who can sit with you now and say, right, Mick, where do you want to be in 5 years' time? And let's work back from there about how we need to get to it. Because the danger is, you'll be sitting here saying to me today, how do I grow my business? What do I need to do next? And 12 months' time, we're going to sit down and have the same conversation.
Goals, I guess, that isn't it? You have to have
But it's deliverable goals as well, though. It's sometimes you can have aspirations, but they're not actually deliverable goals and steps to get there.
Going back to that point I said about sometimes we're delusional at it, sometimes we actually are as directors, because one thing I think a lot of us suffer from is that you've got your team, and your team are doing what they're doing, and then sometimes you're thinking, I want them to do this, I want them to do that, and you're trying to do stuff all the time to improve it, and sometimes you're not concentrating on the good stuff, because you're thinking that far ahead instead of, hang on a minute, we need to concentrate on what we're doing right. And that's a big thing that I find, and especially when I go into Zero or something, and I look at Zero and I'm like, oh yeah, it's all healthy there, but really and really truthfully, do I know exactly penny to the penny? No, I don't. And that's an issue.
Yeah, and
it changes, doesn't it?
It does. And how do you know Zero is right? To my last client's point. Is somebody up to date with it? And I always, I always took an approach through my roles that when I looked at the numbers, they should be telling me what I already know.
Yeah.
Right? So you should already know how good your month was being, roughly. And the numbers should verify that.
This is the problem. So as a business owner, you look, and I don't know if it's because I'm an engineer from an engineer's background, and one at lads, blah, 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 as we discussed earlier this morning. I think sometimes I look, wow, you know, we're dead busy, we're doing this, but then we'll go and buy a van at 40 grand or something like that, and then go, shit, we wasn't doing as well as we thought we was. So, you know, I have been in that situation before, and it's not nice, but people say, well, how the hell would you miss that? And it's because the business is that fast paced and there's that much going on, and I'm dragged back into the business with, you know, various issues, things going on. So I think probably the next step for us, if we want to go, is definitely look down the route of employing someone like yourself, or somebody. If it's not you, you put us on someone, or whatever you do, because it might not be something you do. Might be something you do. I don't know if you do. Do you actually do that?
I do it more selectively now.
Yeah,
is the honest answer.
Because you've got to have a company that is going to be worth it for you as well. I understand that.
Yeah, and it's about time. And I'm not going to take on stuff I can't do properly as well.
Yeah, I get you.
I helped you recently virtually, and that's what the other part you can have is like, are you at the stage where maybe just a virtual finance director can do it? So you can phone up now and again, just bounce things around on the phone.
It's a bit like a PT, isn't it, almost, where you've got your PT saying, hang on a minute, you're not eating the right food, you're not doing this, you need to pull you back.
Just a bit of a mentorish, but more than a mentor, someone who can actually help you and give actual advice and
Fantastic.
to do and say, you know, do it.
Is there anything else you want to add to that before I move on to the next subject?
No, I think you've got it. I think if you it's hard investment, because especially at the lower ends, you know, it's cost out the door, and you'll feel it. But if you see the benefits, then it's worth it.
You said sometimes when you get one of them, because it's not an income generating person, but actually it is, because once they start to get it right, then obviously they become a generating income.
They do, but I think. That actually made me think. There is one other point I think about it, is that you can't quantify very easily, is how much money have we stopped you losing?
Correct. Yeah, absolutely. Yeah.
So your bottom line might have gone up, but by giving you some steer, we've just saved you $500,000 because you haven't made a monumental cock up.
Yeah, I mean,
and you can't quantify that. How do you pay for that, isn't it?
Yeah, very, very true. So the next subject I want to talk about is the pitfalls, nasty surprises, any agreements, and I'm getting onto that because Richard's helped me out with a really sticky situation that I had that I never understood existed. So I'll explain a little bit, and I'll explain how Richard helped me, etc., and what he did for me. So around about the 15th of August, our finance company that basically the holdings bank that take the credit card payments and hold the money for us is a company called Avalon, and they had signed an agreement with me about 3 years ago. I've had credit card agreements for the last probably 19 years, etc. So how it works, the customer pays on the credit card, the money gets held into, correct me if I'm telling this right, gets held into Avalon, and then Avalon pay me. But what I didn't realise, we was taking deposits, and what we didn't let them know about the deposits, the amount of deposits. So they do a financial audit on your company, etc., and they picked up on it. So they sent a letter to my accountant, which was my trading address. So unfortunately, we didn't get that, and they sent an email to us which went into spam, and it basically read that they was going to hold money in a holdings. So from the 15th up to the end of September last week, was it last week? Last week, we were taking payments, and we was working. Now, going back to an FD would have spotted this. We was going off payments that go into Avalon saying they paid and using zero. We wasn't looking at what's in the bank. So the accountant picked up on that the bank was low. Sorry, I picked it up and let the accountant know there's something not right here. And when we went through, we found out that Avalon had not paid us. So we rang up the company, which was 365, that provided us the in-between person, like the broker, if you will. They put us on to another company. They told that they were holding the money and they wouldn't give us a reason. And the actual hold was 149,000, something like that, wasn't it?
Yeah.
So at that point, I'm like, oh my God. So we worked out they had about 70k of our money at this point. So I really didn't know what to do. So I rang them. They gave me an email. The gentleman who did it, he was a really nice guy, but very emotionless. I can't explain it, basically. What's going on? Why? What have we done? And they would not tell us. They just sent us a list of terms and conditions, which I didn't understand. So being part of a mastermind, at the Millionaire Mastermind where I met yourself, I then reached out to Joe. Joe said, listen, Mick, I don't really know. I said, what about Joe, the guy in financials? Anyway, I reached out to Richard. Richard then took over it. And within, I would say 24 hours, he got me, they reduced down to 30 grand, which they still kept the 30 grand, but that was a massive weight off my shoulder. Now, can I just say thank you for that, Richard? That's amazing what you did. And I am indebted to you, by the way, by that, because It really was stressful, and I was so emotional. I can't explain it. And as soon as I spoke to Richard, and he calmed me down, this is how they act and this is how they do. And you kind of think this is solvable, and we kind of think we will get the £30,000 back, but they can hold it for a long time. So can you explain to the people that are listening, because there's lots of people who are taking card payments in my industry, and I'm pretty sure they don't know this exists.
They don't. And we were at an event yesterday, and I met people similar to you, and we shared your story, and they came up to me, oh my God, am I going to be exposed the same? Because I guess what's disappointing with Avalon at the time is the terms and conditions are there, but they're vague. And they don't really make it clear to you about the consequence or put numbers behind it. And the way they communicated with you was pretty appalling, wasn't it?
It was.
They kept stepping behind a cloak of, we're not allowed to tell you for credit reasons, for data protection reasons. Well, that doesn't help you, does it? Now, fortunately, because it's my world, I could see straight away, read between the lines of what they were saying, which you, to be honest, had no chance of doing unless you had my experience. No chance.
I would have just ended up waiting the 180 days or the 580 days. But I mean, for a company that's turning over that sort of money, $1 million, I don't think people realise that 70k is, we're on 10% profit roughly net.
Yeah. It's a lot of money. It's huge money. 150 grand just, gone. What do you do with that? So we approached it methodically, as you said. Took the emotion out. I'm not very emotional guy, emotionally detached, I've been described a few times, okay, which has its benefits as a finance guy. But we broke it down. We looked at we actually turned it round. I said, what's Avalon's concerns? Well, Avalon's concerns is they're exposed. So let's be fair to Avalon, that they believe they're now exposed because they've been given some new information. And that new information...
Jump in there so our audience know what that means. Exposure.
Yeah, okay, yeah. So you mentioned you take a deposit.
Yeah.
And yours quite small, but if it was bigger deposits and lots of them, that credit card company takes the money on the credit card and gives it to you. And it's a deposit for something a service you're going to provide or a product you're going to provide, in this case, boilers. If you don't turn up and give that customer the boiler, they can phone their credit card company and say, I want my deposit money back because they've done me over. Then, even though they've paid you the money, Avalon would need to fork out all that money back to their credit card holders. So...
And then they retract that from me, hopefully.
They will then come after you. So if they look at you and say, you're not a multi-million-pound company with multi-million-pound profits, there's a risk that they won't get that money back, which is why they then have a reserve. So there was two parts to what they did to you when we read through it. One is the deposits, which, unfortunately, the first email from your accountant gave them a list of orders.
The accountant, Matt, he's a great accountant.
He's very good.
He didn't know. He was like you said.
He didn't know. So he answered a question, but it was the wrong question. Wrong answer. So when he sent some information, and they came up with 150 grand. But when we actually took relatively simple steps to present to Avalon the facts of how much deposits you were taking and how little that exposure was, £1,000, they were quite reasonable and said, okay, based on this new information, we will get rid of the 120. But you would never have known to ask.
What was it? 100%. What was bizarre about that, Richard? Because it's bringing back horrible memories, this, by the way. So that's like, if I think we worked out that we'd have, say, 7 boilers at maximum at one time, because we fit, just so people know, and anyone's listening will understand this. So say your boiler's £2,500, we take a 250 deposit, the commitment deposit, and we hold on to that, and that's returnable within 14 days. Now, most of our customers actually have a boiler fitted within 24 hours, 1 week, because they can't wait. So that's why it's a very fast churning model. So we take the deposit, we fit the boiler, now it's a sale, now it's no longer a deposit. So, Richard, we sat down, didn't we? And we looked at it with the accountant. We said, probably look at 5 boilers. So we said £1,500 roughly, didn't we, that we should put in. So even though they give me 120 and release that, they still got approximately, in my opinion, approximately nearly 30 times more than they need.
Well, and their argument now is that is for a different reason, which is cashback, clawbacks, that your customers will come back and say there's been a fraud or something else or mishandled, which you've got history as 0.
19 years.
So we could show that. So their next argument is, well, there is a period of cooling off maybe that the customers can come back and say, I want my money because the boiler doesn't work. So I think the next stage for you is to go to that next level and show to Evalon, look at our contracts, look at the boilers we fitted. There is no reason for these to come back to us. Therefore, there's nothing they can claim because they're fitted, they're working. There's no
guarantee. There's no Bosch.
It's guaranteed by Bosch, not you.
Yeah.
So there's no scenario where they can claim money back on their credit card. If you can present that to them, and then worst case scenario, they should start staggering down the 30,000, but you should get that back.
They did say that if I cancel now, approximately, if I cancel today, which was beginning of this week, on the Monday morning, it would approximately take 180 days, and then they'd review it in 100, not give it me back.
But even that's wrong, based on your business model, your contracts, and that is still an unreasonable stance to have, because you could probably demonstrate that they've got no exposure. So if you, again, take the emotion out, treat it factually, can you prove to them they've got no exposure, and put the onus on them to say why they've got the 30,000?
You mentioned something which is really good. What about my exposure?
Yeah, well,
I've got a £30,000 exposure. Now, if they go bankrupt, where's my
They could. Now, you'd think a big company, but don't take it for granted. Big
Yeah.
companies, Lehman Brothers went bankrupt. You know, bigger firms and big camps have gone bankrupt. So your money is with them. They're holding it. If they go bankrupt tomorrow, you've lost your money.
That's correct. And that's, that is really great. I mean, again, going back to as a layman person, and anybody listening to this will probably be like, how can they do that? But the fact is, guys, they can, and they have. So I think every time you do something like, say it's not Richard, but whoever it is, definitely get someone to look over, even just simple as a car machine. Say someone looks over and it costs you a couple of £100. It's definitely worth it, in my opinion, to do that.
And it's whether there is competitors of Evalon that don't have the clause.
Yeah.
If they're all the same, there's nothing you can do about it other than be as open and transparent.
Well, at least you know who you are, don't you?
There's something I call them poison pills. It's a common thing.
Poison pills.
Poison pills. Little clauses in contracts, and maybe I could rattle a couple of examples off. There was one client I worked with which had a large £30 million loan from what they considered to be a friendly, not competitor, but someone they worked with in the same industry. But within that clause, there was a clause that said if they missed a payment or they couldn't pay it back at the end of the term, there was an end date to the agreement, which my client assumed would just roll. But actually the clause said, if you don't make the payment on that date, £30 million, we will take over your entire company. Yeah, poison pill.
Wow. My God, yeah.
That I do a lot in bridging finance. Now, most bridging finance...
Like bridging loans, that?
Bridging loans, say, against property. And there are always default clauses, and most quality, good lenders will have clauses in there where you have a default rate at the end. So if you get to the end 12 months, you might have been paying 1% a month, but if you go into default, you go to 2% a month.
Right.
Yeah,
well, that's still okay.
It's okay, but the poison pill clause with some of them is, if you default, we will charge the default rate back to day one,
so
to the start of the loan.
So that's very interesting, because some of the buy now, pay later schemes look like that, don't they? So you buy now, pay later, and then you default, and they go back to day one.
Back to day one. So you've got to watch that. Those sort of things.
That's anybody that's, maybe I'm not going to mention any names at this point, but say you was going to buy a sofa or something like that, and you do buy now, pay later. You've got to be careful there, because if you buy it and you're thinking I can afford it, because some people don't want to. I find this, they don't want to tell me the position, so they do buy now, pay later. They put themselves under stress, and then when it defaults, it can go back to the beginning at a higher rate, and it's not 2%.
It's a lot more.
That was 7.9%.
Exactly,
it's a lot 11.
Yep.
So you've got a massive jump there. So then, a bit of advice there, and this is not my opinion, that if you can't do buy now, pay later, just look at the stuff which is interest bearing, because you might be better off doing that.
Yeah. And probably the last example I'll give you, which came out relatively recently for me, because it was on the back of a client having this issue, and we got a lawyer I know who's very, very, all over contract law to look at it just to confirm that it was actually true. There's a very well-known lender who does lots of business finance loans, and they do unsecured business finance covered by a personal guarantee. So the personal guarantee works.
So, for instance, my father, for instance, would say, I want to take it, and I say, unfortunately my dad's passed away. This is just an example. Dad, can you lend me some money? I can't, no, son, you've got it on your own. But what I'll do is I'll PG the money for you. So if that happens and I default, he's responsible for the debt.
That's right. Or if it's a loan into your business, you as a director would give a personal guarantee as well as the business. So if the business defaults, you will pay for that loan as the director or shareholder. Now, what normally happens is that when you repay the loan, everybody assumes your personal guarantee liability is gone, and in theory you can ask for that back, and you can ask for a piece of paper back saying that it's gone, and that's usual. This particular lender does unsecured loans, and what transpired that we found out was that it's in perpetuity, it lasts forever. So the scenario.
Sorry, so when you say it lasts forever, do you mean that it never goes away, the PG?
It never, and worse than this is the bit that our client discovered. Let's say, Mick, you take this loan out in your business today, you repay it in 18 months, it's all gone. As far as you're concerned, it's all paid back. The scenario is you then sell your business, new directors come in, shareholders, take another loan with that same lender. If they default in 5 years' time, your PG still stands to that lender for that new loan.
Passes down the business like, wow.
I couldn't believe it. I said, that can't be true. I said, well, this is why we got lawyers involved to have a look at it. And her view was, but look, that's what their contract says. But she thinks it's challengeable if it's in the law. Now, the lender will say, oh, we never take that, we never ask for it, but it's there, just in case, which means they can.
Correct, so why would it be there?
Exactly, so give it back. So they do, and they refuse point blank to let my client off that clause and to give it back. And it appears it's quite, this is a big company, Funding Circle. I'm going to tell you who it is. Yeah. It's them. Right, so you see them all on TV and everything else. Now that's what our lawyers have said. Now whether they can change different views, that's how it's come. That's how that came about.
That's interesting. That's really scary because I can't even believe that.
But we use Funding Circle, and again, I've used this term. I'm not a bank basher or a lender basher.
You just give facts, aren't you?
It is what it is, and as long as you aware of this when you get into it, it's my job to say these things and what happens. And we put lots of loans with them. They lend the money to businesses, support them, same as lenders all over the place do.
I think what's happened to me and what you're saying there is that it's very rare. I've not met one person yet in the whole circle that I am going in, and I have got access to loads of people within the masterminds and the stuff I do, as you know, and I've not met one person where this has happened to. Now, the fact of the matter is, say it only happens to 1% of people, or 0.5% or 1% or whatever it is, still a lot of people, isn't it, that it happens to? Yeah. And that's why you don't hear about it, because I might tell, and to be quite frank, if you say that bank's holding money, there might be in a bit of an embarrassment there, because somebody might say, well, hang on a minute, what's he up to? So I'll openly say I did nothing wrong. And what surprised me when you pointed this out to me, made it all clear to me, is that I've had finance, taking credit card payments for 19 years. I've never had a clawback. The lady who came out, who sold me the package, the reason why I went with this particular company is because they were far cheaper on the rates. At no point did she tell me any of this, and she filled out, and I just signed it because I'm dyslexic. So I trusted this lady. But to be fair to her, she probably even know herself. So I think they're not, if they'd have dragged my attention to that at that point, you take deposits, I would have said, well, what do you mean? And then they just said, do you know they can hold in your money? Then I would have said, look, we need to have an update, because in my opinion, for someone that's layman, because everybody's taking car payments now, tradesmen, you see all that tell me you can do it with so many different people. If all these terms and conditions are in place and they get a hold of this, at some point they might decide to claw money in, because ultimately they can. So I think there should be some sort of cheat sheet that they give out, transparency that we understand, because you showed me that contract and you read it out to me and Danny understood it, but even the girls in the office, they was reading it to me, but they wasn't picking out the points that was relevant to me. So I was completely knackered, with being dyslexic and stuff. It was such a shock. And then Richard explained to me, and then I'm like, oh my God, because it made sense. But I think it's important that you either get someone like yourself or a solicitor to just look over some agreements, because let's face it, you couldn't put a gas check on your boiler, could you? That sort of stuff. So I think everyone's
and look, I understand why people don't, because there's a cost to it, and particularly solicitors, we know how much they cost, but that's the way of the world. That's it. What it is. Yeah.
Have you got anything that you can add to any of the people that are listening out there? Any advice on this?
No, I think we've covered that. There, just be aware.
So the next subject I want to talk to you about is something that I might decide to do at some point. Is how to scale your business using debt finance.
Right.
What advice have you got that? And could you explain to us what debt finance is, what it consists of? And for instance, I could, say I come to you and I want to scale my business. How are you going to help me?
Yeah. Well, the nice thing that there are lots of products out there. And what's really important is to match debt finance products with your needs. So what I mean by that is, well, let's use a simple example. It's not a good idea to buy a brand new car with a mortgage on your house, right?
Yeah.
Why? People will say, well, but a mortgage on a house might be cheaper. But the mortgage is to buy a house for the long term. A car
is a short
10 to 4 years. So you got to match. You buy it. That's why you have car finance. It's the same in business. If you're buying an asset like a car in business, there is asset finance. If you're fitting out your office, there's asset finance. If you're buying something or want to put working capital into your business because you want to grow more staff, you can get a term loan that lasts a bit longer, and that can help you grow. And then you hope that by the time you're starting to pay off that loan, that new staff is generating revenue.
Yeah, so basically you're borrowing money to cover wages, office expenses.
Yeah.
If it's an engineer, maybe, that come under a different one. Basically, this is down to growth all in the back end.
As in, you've got some expenditure you're going to take as a lump sum, and you match it with some sort of loan for that, where the revenue's coming in the future. Compared to what's called working capital facilities, where we all have that monthly flow, don't we? We have to pay our suppliers probably before, Now, you don't want to take a long-term term loan to fund a monthly cash flow, because let's say you borrow 100,000 because you've got £100,000 you need this month to cover some suppliers who haven't paid you. Next month you start paying off your 100,000, and by the end of the year you've repaid it. But every month you still need 100,000.
Yeah, because
so what are you going to do?
Yeah, because then you're back to square one.
So you have a working capital facility, and there's a number of different ones. So think of it less like an overdraft. But if your bank doesn't give you an overdraft, the other things you
expensive overdraft, so you're buying 8%.
That's cheap money these days. That's
Is
cheap
it
money.
really?
That's cheap money these days. Yeah. So if the popular alternative is what's called invoice discounting. So you have
factoring, or is it not?
The factoring and invoice discounting are very similar. They're both, you borrow against your invoices. So if you raise an invoice today for £20,000 to a customer, you can get that money straight away from the lender.
B2C though?
Not to consumers. Not in your business. It doesn't work. B2B. Yeah. So, but that's working capital. So every time you raise an invoice, you borrow the money when you need it, and you pay it back when your customer pays, and you use that money to pay suppliers. If you can't do invoice discounting, because like in your site, there's something called trade finance, and that's particularly relevant for construction or people working in that sort of related area. So a trade finance line, the bank gives you a facility that you pay your suppliers, or you pay your employee, your subbies, and you then have 60 days or 90 days, whatever you agree, to pay your lender.
If you could, like us, for instance, in the summer, when the summer months come in, we're like shit, and all heating companies come up against that because we're seasonal. We have got things in place to stop it, but if I'm dead honest with you, it's basically September down to March is when we make the money. But that what's disappointing sometimes, you do lose a lot of your, I mean, we're working on ways on that. We've got home care, we've got all sorts of things in place, and it's working, but it's a slow process. The home care especially, I want them to go quicker, just can't get them any quicker. But that would be really good if you knew that you could ring someone up there. It's just, I'm struggling this month, can you do this? And then as soon as we hit winter, we can then,
And these days, they're all online. They're all simple platforms. You just go onto your facility, you pay your supplier. So those facilities exist.
Do they give you like a limit?
Like
so there's 100 grand, mate.
Yeah. And that's it.
That's it. And then as soon as you borrow it, you pay it. Or is there any any other clauses where you pay it off in a lump sum? Would there be a clause on that, or does it just reduce your interest rate?
You only pay for what you use in these facilities, which again is why, the good advice. So if you have a good month, you don't need it, you don't have to use it. So you pay for what.
So it is essentially like an overdraft.
Yeah, it is. But a little bit more expensive, and a bit of administration behind them. So you've got those sort of facilities, and then if you're going to go into, say, acquisitions, buying companies, you can have loans, cash flow loans they're called, where you can borrow money against your strength of your profits and the profits of the companies you're buying, and they'll give you money to buy up front that company, and you can factor that in. You can do different things. You can have working capital facilities, term loans, secured loans. You can mix and match, but it's important to match it up.
This is why it's really important, guys. Like, what he's just told me, I've took about 75% of that. Do I understand it all? A little, 75% of it, but he understands 100% of it. So if I went into anything like that, I'd go through someone like Richard, because it's his job. I won't go to him for PT, and I certainly won't go to him to fix my boiler.
No.
So ultimately, I think the point I'm trying to make is that you've got to be careful, because some people just want to sell you a product to get a commission, whereas Richard is more like broad. He uses different lines, does what's best for the client. That's what you need. Hey, would you class yourself something like a broker? Or what
you won't see broker anywhere on my website, actually, or any material. We sell solutions.
Solution solving.
Yeah, I find solutions for you. We can go to the whole market. Yeah, of course we make fees and money out of it. We all do for our jobs and our expertise, but we put ourselves as advisors first. We do a lot of free advice. We talk to clients.
I can vouch for that, guys.
And that's what we do.
Yeah. I mean, is there anything else? I mean, I kind of understand a lot more than I did 15 minutes ago, 20 minutes ago, than I do now. But like I said, if I was going to do anything like that, so say a company come up for sale, and I thought, because everybody talks about, I've always used my own money, and I've now realised that that's not really a smart thing to do, because ultimately the cash that you've got could be in something else, making something else. So, like some people say, you could put 100 grand back into your company, use your own money, or you could borrow that over a term and use that 100 grand on a different revenue stream of income.
Yeah, I think the decisions for people are not to confuse two things. One is, if you've got lots of money and cash, and it's spare cash, lending it to yourself, investing in yourself, is that a good idea, because you're going to get a good return on it rather than paying somebody else money, right? If you've got limited cash, or you have lots of opportunities you want to invest in, which is usually the case, to be honest, with entrepreneurs, you want to do lots of things, then you can spread that leverage up. So debt is a way of leveraging up your opportunities and doing more.
So I think the word debt, if you said to somebody debt, we're trained that debt's bad, aren't we? We're all trained that debt's bad, and I don't believe that anymore. I think there is good debt and bad debt.
You can't. Yeah, there is bad debt because you get the wrong solutions. You can't. I don't think I work with. Well, obviously I don't work with any businesses that don't have debt. I've had some come to me that have never used debt, and then they put debt in place because they want to grow. They want to leverage. There's very few people in the world who have so much money they don't need to. We met a couple yesterday. Probably don't need to borrow, but even the people presenting use it, and they debt and they leverage out, and it's because it's leverage. In the same way that you would recruit a good team underneath you, why do you do that? Well, you're actually doing that to allow you to leverage your own time into something more productive that can generate more income, and that's what it is. A lot of people come to me and they're growing their business and they're taking it steady. They're growing, so they don't want to take debt, that they see it as a bad thing, or they don't want the risk. That's fine. There's nothing wrong with that choice, but it's going to be a slow drip growth.
Well, if you look at all the big companies out there, they're all in debt. I mean, I could never understand how, say, £600 million companies in debt sell for good money. And I'm like, how does this work?
Well, the key thing, what I always talk about is what's your plan for repaying the money. Working capital loans we just talked about, in theory, they should just pay themselves off because the debt has come in. If you've bought a car vehicle, you're going to pay that off with the extra profits you're going to make by having another car in your business. And it's the same with everything. Whether you're buying another company, you've got to believe that having that money in the debt, yes, you'll make enough money not just to pay the debt off and the interest, but you'll have a lot more profit on top. which is what you want. And then that answers the question about why people do it in the big businesses. Venture capitalist firms, certainly in the early 2000s, leveraged debt everywhere. And the reason was because you can get a much higher multiple for your company and the profits that you make. If you sell your company for times 10 of your earnings, 10x, yeah, well, that's going to cover all the debt and all the interest and all the costs that you've incurred. Yeah, that's why they do it.
That's brilliant. Have you
leverage
anything else that you could add? I mean, if I sold my business 10x, I'd be more than happy. Would be more than happy. So is there anything else you could add before we move on?
Well, just, I guess it's on pricing and how banks, so people come to me and they're surprised. You mentioned it just now, overdraft's expensive, right? Well, let's talk about today's world. Interest rates are 5% today, as we're talking.
High,
yeah.
Well, I think we've had it lucky, haven't we, for a long time?
We have. Let's 5%. I mean, my age, when I actually started work, interest rates were 12, 14, right? So quite high. A bank needs to make a profit. You wouldn't expect a bank not to make a profit. So they add a margin. So your starting cost is going to be base plus their margin. Now, the cheapest debt out there from high street banks is 2.5% over. So 5 plus 2.5 is 7.5. So if you're telling me you're getting bank overdrafts at 7.5%, 8% right now, that's cheap money. It's good money. Okay.
That makes sense.
Makes sense?
Yeah, it does. I think it's because like in our industry, if anything, I think every industry is the same. I can't complain about my own. When you get the situation what the finance is in at the minute, we're doing B2C, so the customers can't afford it, and they really can't, and a lot more are failing finance as well. Ours is Navuna, which they are a very straight company. They have just one rate, you're in or you're out. So some companies I could get you finance for a higher rate if you was a higher risk. Yeah. That's what I'm looking at doing. I am honestly going to have to do that because if some people can't pass finance, obviously we lose that sale. But I just think we're just in a completely different world than we was before.
We are, and that money I talked about there is for what a lender believes is to be low risk. So they've got lots of assets and lots of profits. Once you get into you need some working capital, maybe you haven't got the profits, but they're going against your invoices, they actually then have to add a risk margin to it as well. And then when you're talking about the companies that do unsecured lending, so remember, they've got no security, they have to factor in.
Risk, isn't it?
Yeah, so the bit that you've got to remember is, let's say they have 25% of their loans default. They have to cover those defaults by charging everybody else.
I get it, yeah.
So that's why you find the rates vary so much, and unsecured lending tends to be at least 12% plus. I mean, at the far end of the extreme, I had one client last year who desperately needed $150,000 to pay a VAT bill, because if they didn't pay it, they would lose all of their rights under a payment plan or their tax. So it was going to be, which was a lot, and they needed to pay. The money they got quick based on their company, they had to pay, ready for this, 6% a month.
It's a lot, isn't it? It's a lot.
72% a year.
Yeah.
The only reason I said it was the only lender who could do this. The only lender who could do it in 2 days. But the only reason I could justify it and hand on heart say to the client, you should do it, because it was a VAT return, so they were going to repay that within 2 months. They knew the money was coming in to pay it off. So pound notes wise, it wasn't going to be 72% a year. It was going to be for 2 months. It did the job, and it saved them having to get or remain their much larger £1 million tax payment with the bank. So it was worth it. So that's the kind. But if you came to me and said, and you weren't making profits, and the lender was going to offer you 50%, I just said, really, let's not do it. So it's matching again.
Yeah, I mean, I think people like your parents brought you up, didn't they, as well, saying, if you're going to scale your business, you put your hard work in. And I don't think in 24 that works. You've got to put the hard work in regardless, but I don't think that model works anymore where, because you saved up for your own house. These young people, whatever, there is no money to save up because it's too expensive to live. There's lots of examples out there. So we would probably look at, if we were going to scale at doing something with you, so we could do it. I would rinse everything I've got first and then look at it. Like the first thing I think you've said is look at friends and family or people you trust, and then if that doesn't work out, but
that's not always a good idea, because if you can't pay them back, you're in a
Well,
terrible
I
position.
lent my friend a considerable amount of money, and it's gone wrong.
Yeah.
So I'll get the money back, of course I will, but when?
Yeah.
You know,
And there's always
yeah.
bad blood or something.
Well, you don't. Yeah, I didn't take the advice of my mentor about that, to be quite honest with you. I went from the heart, and it was, again, an emotional decision. I would say never make a decision to lend anybody. I mean, this was a lot of money, to lend anybody money when you're in a frame of mind of friendship.
Yeah.
You need to go to someone like you and say, what do you think? And you say, absolutely no way.
Yeah.
And you better transfer all your money into this holdings account before you even think about it. But yeah, I mean, I've done that. So before we move on to the next subject, have you got anything else to say?
No, that's it. I think we covered everything. Lots more to say, but it would be
Yeah,
here forever.
It would be forever. I mean,
Yeah.
there is. I mean, I've got emotional attachments when you went VAT and tax and stuff, and I didn't want to get into that rant. I'm just concentrating on don't get into that, which I won't. The other one was the next subject was
Building your business
getting
for
your
sale.
business
Ready for sale. Yeah.
Sorry guys, I've got so much to remember, and I was still thinking about that Batman. So yeah, getting ready.
Yeah. Very, very common question, and it's. I think the first thing to start actually is to manage timescales and expectations. All right. Because people think, all right, I want to sell my business. Right, let's do it.
What is the average
Let's do
time
it now.
instantly, Richard?
Right.
Say my company. I've come to you to sell mine.
Let's assume you're ready to sell. You then have to find somebody to sell your business, produce what's called an information memorandum outlining the pros of your business, why people should buy it, and it goes to market. It can then go to market, and this depends on how big you are, of course. It could take longer, but it goes to market. You find some buyers. They come in. They all review it. You get, hopefully, offers. You pick one. They then go through lots of due diligence. 9-12 months would not be unreasonable and would be quite quick, unless you're doing a quick process, or you've got something lined up, or you're trying to, you need to sell it quick at below price. But it could take that long. It could take that long, and then it still fails right at the end. So bear in mind. Now, that's from the day you're ready, and I used the word, are you ready to sell? Because it could take you 2 years, 3 years to be ready to sell. And I think the decision is, for most people, are you running a lifestyle business, or are you trying to create an asset that you're emotionally detached from that you think is going to be worth money and you're going to sell? And once you've made that decision, it changes things because you treat it differently, right? Because when people come to do due diligence, they're looking at things like, have you done your tax returns right? Have you been taking more directors' family money out? Does it look, are they going to be caught by stuff that then hits your price? They look at your contracts and your customer contracts. If it's B2B, are they rolling? Are they long-term, 5 years? If you've got 5-year contracts with customers, you're going to get far more value for your business.
That's why we went in the home care, so we could produce.
You could do it,
revenue
and that's good. Recurring revenue, contracted revenue. Have you got a management team that's running this business that is not you?
Yeah, because they have to employ someone to replace me if
But
that was the case.
if the business falls apart when you're not there, it's not worth anything. Yeah. That's the lifestyle business of it, which is where that's
Mine's
what you
a
hear.
mixture, I'd say. We've discussed this. I would say mine's a mixture because it doesn't fall to pieces when I'm not there. But however, I still have involvement in it. So I think.
And there's nothing wrong. I don't want to over-egg that. I've bought lots of businesses with the managers and the owners in place, but they stay around. They could stay around.
Is that like where you do like?
It's like an earn-out. It could be 12 months. It could be 5 years. It depends on your next phase of where you're going. You might be approached by a larger company that actually wants you in their business to grow their division. And you get a payout, plus you get a bigger salary and you get more opportunities. So it depends where you're going. But the key thing, I think, is once you've made that decision, actually, this is something I want to sell. I want to sell it in 5 years' time. Start thinking now, who are the likely people to buy my business? So the usual candidates are there competitors out there who want to buy your business to grow theirs? Are there big firms out there that want extra volume? Those, you get better value for that.
There's a lot of disruption companies at the minute buying companies out in our industry. One's a famous one, I probably shouldn't mention it, but they've bought a few out, a couple of people I know, and we're on a mentorship
Well,
with him.
if you know that company, the question to then ask is there a minimum turnover that the big boy or the one in the market is looking for?
You seem to be buying companies that are having a revenue stream of 1.5 million to 3 million.
And if there's a trigger point, usually there's some sort of trigger point that makes it worth their while. They're not going to do small because the cost of doing acquisition is expensive, so it's not worth their while. Do you get a higher multiple? I just went through a journey with a security company, and if you're buying at sub 5 million, your multiples might be 2.5, but once you get to 30 million, your multiples are times 4. So we bought 6 companies at times 2, trying to make a company of 30 million plus, and then you sell it at times 4. So there's different strategies that you can apply. So in your industry, if the turnover and the better multiple is at 3 million as a trigger point, and I don't know your industry well enough to say that's the point, you'll then already have a target in mind. You want to be 3 million with good contracts, good management team that can live with or without you, and a decent profit that you can then maximise out.
It's like Joe was saying, a £3 million plumbing heating company, doing that you can, do really well out of it. There's just risk elements of every single company, isn't there, where you're at. The comfortable number, I would say, is around about 3 million.
Yeah.
Of what I know that I've spoken to various different companies out there. I interviewed a guy, he does about 12-14 million, and he's like a mate. I've told you about Lincoln. He's absolutely smashed it. He's gone above expectation, because most companies, it's very rare for a local plumbing company, apart from Charlie Mullins, Pimlico, to do that. Actually just private customers and the odd contracts and stuff.
Yeah.
Like, I think that company's about 8,000 jobs a month.
Yeah.
So it's high turnover.
And look, there's a lot of work that's been done in terms of how do businesses get benefits out of doing an acquisition, because it's actually quite hard to make your money out of an acquisition. There's a couple of ways to do it. Usually there's a synergy. So you might buy a company that's very similar to yours, but you can merge the contracts in, but take their management team out. So all of a sudden their profits jump after acquisition. So that makes it worthwhile. Quite difficult to do, but the other way is, as I said, you're buying because you're buying for scale, because actually your ambition is to get to 10 million, because at 10 million you can do it. But you're not going to grow to 10 million, let's be honest, organically.
No, absolutely no chance.
So you go out and buy 5 firms, you bolt them together. Yeah. By the time you've bolted them together, you then got you've got a business worth 10 million, making a profit that you can hopefully sell at a higher multiple than you bought them. I mean, that's the golden dream, isn't it? So
absolutely. Like when you get, so for instance, say I come to you 2 years before getting ready to sell. So would your advice be stop exploiting your company for, a lot of people go out for food, meals, vans, whatever. Would you say you need to pull back as a director?
It's not necessarily. There's two reasons. There's 2 things to say about that. One is, if you keep in complete transparent records, you do what's called an add back to your earnings. So if your profits are 100,000 after your expenses, what you're going to be saying to the buyer is, these are the expenses I've taken out. They're 100. So we want you to pay for 150,000 of profit, not 100,000, because I can stop that.
You have to prove it.
You could just prove it. So you keep the records. But the more important point, there's an important point to caveat that with is it legal? Yeah. Right? Because if you're taking stuff out that is potentially has tax consequences, you've not been paying tax,
or you've not been aware of,
That's
the biggest,
and that we've seen that. I've seen that. As a purchaser, you're liable, because you've bought the company shares, for any tax liabilities. So you need to do your due diligence as a purchaser. So if they come across dodgy things, they'll hit your pricing.
A lot of people scam with that, haven't they? They've not done the due diligence right.
Oh yeah. You do either you don't spot it, or you do spot it and you have reserve held back
that
to cover it.
Wow. Well,
so those are the kind of things when you're trying to sell your business. It's different, as I said, to a lifestyle choice. You need to be transparent. You need to get things in right contracts in place. You need to start making sure all your legal documents are there to hand. You need to make sure all your contracts are good. One of the big challenges recently in industries like yours is the IR35 laws with subcontract. So a lot of the big boys won't buy it unless you've got staff on your books, or they're going to go all over whether you've paid the right tax, are they the right contract?
Yeah.
Because if they're not, you can't sell your business.
That's interesting because I think a lot of the big boys, I'm not going to mention, who use nothing but subs, the internet companies, I think they may have an issue with that.
Yeah.
Is that a relatively new thing, or has it been?
New several years as such, but it's certainly focal in terms of their focus. It depends
when they bring out these things and then suddenly start policing them, don't
well, that was the trigger point when the taxman started policing it, and it becomes an issue, and they go after people and they go after certain industries.
Yeah, I get it.
That's when it becomes...
Which I would say now is the time that they're going to be doing these things because of the situation of the economy and this particular government. They want money in as quick as they can.
Yeah.
And they don't really care, I suppose, because they just hide again behind the paper, won't they?
So one, you might take a view, again, as an entrepreneur, you might take a view, say, I'll take a view on this. I'll just do it and worry about the consequences later. If you're serious about selling your business, it's not a good idea.
No.
Get your business right, because then your business model and your business is worth more money.
It's mental, isn't it?
You might not get the data. So there's usually a compromise between you take less cash while you're running it to get a bigger value at the end. That's sometimes...
Somebody who sold her company, he used to take about 70 grand a year, and he sold it, and he made, it worked out that he made, for 10 years, he cleared 150,000 plus. So what he did, he looked at the big picture in 10 years' time, that when he sold it, he'd have his reward in the time he'd said, right? Because I don't think people look at it like that. They look at it now instead of thinking, well, if I take, say, 70 grand now and I still have a very good lifestyle and everything's cool, and then I sell my business for multiple figures at the end of the journey, then I get my 150 grand reward after that. So does that mean per year? So then it becomes really worth it.
And again, using that phrase, lifestyle business, is it? And also letting go of your business, and you've called it like your baby and stuff like that, isn't it? You've got to...
You saw it with me, didn't you?
Yeah, you've got to... But you've got to say, right, actually, what is it that makes it attractive to other people and other buyers? What is it they're after?
One person said to me, Richard, he said, Mick, you are not M&R. Do you understand that? I'm like... What do you mean? He said, well, you think you are, but you're not, because it's a limited company, it's an entity, and when you start treating it as an entity for exactly what it's there to do, to give a good service, serve the people well, and serve you well, that's when it becomes that proper business. Okay, that's absolutely great. Is there anything else that you could add to anybody that's thinking of? I am thinking of doing what you said about buying companies and stuff like that, or just going into another area and replicating what I'm doing. I would,
if you stick to what you know. One, you're going to be able to raise finance far easier if you're buying something in an industry that you're already working in, and you're going to find those synergies, find those bolt-ons, and know what your exit plan is. Have a strategy in place, because if you have a strategy in place, when opportunities come along and they fit, it's an easy decision. If you don't have a strategy or a plan, you're always fumbling about. You're always thinking, should I do this? Should I do that? Do I have to make it? Should I spend this money? Because you're always continuously thinking about it.
Brilliant. Fantastic. So before we wrap this up, is there anything else you can... I can't really think of anything else which I've had of experiences of stuff, but I've certainly learned that there is ways to scale and do things with guys like yourself, because I think you guys get a bit of a bad reputation, especially with tradesmen, like, ooh, everyone's trying to rip each other off now. I suppose most tradesmen that make it are usually from a background of distrust because of where they've come from, so we don't understand it. But when you meet someone like yourself and you start to understand it, you start, and it sounds a bit sad, you start to get a bit excited at the possibilities of what you can offer and where we can go with it. So I've learned that, I've spoken to you a few times. I think I've learned more in this podcast than I've ever learned about finance, so that's been really beneficial to me, and I hope it's been beneficial to anybody else.
I'm glad to hear that, and I think that's the difference is, I'm not unique, but we are quite different in that I've got a team who we are advisors first, and we raise finance for people, and that's what we do. Whereas there's a lot of brokers out there who don't have a blooming clue, to be honest, about the actual business needs, and they're there to sell a product.
Well, that's what exactly.
And you get cold called. A guy, do you know, a company called my office 3-4 months ago. He said, "Oh, you're part of Richard. I've got you £25,000 that you can have tomorrow. Draw down." said, you what? I said, yes, 25, you're pre-credit approved. I said, do you know who we are? You're Pilot Fish. Yeah. I said, do you know who we are? And you're just giving me, you've phoned up to sell me, I've got 25 grand. He said, yes. He was going to charge 10% commission on his loan, right? So after a while, I played him along, and then I lost my rag, and I said, you know who the hell I am and what I do for a living. And so what worries and scared me about that call was not the fact that he called me.
He's a salesman.
Is that he is calling 100 people a day, and some of them are doing it, and they don't know that they're buying the wrong product and paying extortionate fees. That gives the industry a bad name, and that's exactly what I was going to say. So in your industry, my industry is the same. You get those people adopting those practices, whereas you need to find a person you can trust, work with, build relationships with, who knows what they're doing. And I'm not unique. There are others out there. Of course there are.
I think you're doing yourself a disjustice there. I found you unique what you've done for me, and I really appreciate it.
That's right, mate.
And it's been a pleasure to have you on.
Thank you
very much. Right, guys, so I hope you've enjoyed that. Could you do me all a favour, please? For me to do more of these podcasts and get them out there, can you please go and like and subscribe to any channels that I'm doing and show me some support? It's really beneficial to me, and then I can bring better guests on, because the more views and followers we get, I can bring better guests on. Now, I'm not saying better than Richard. I mean, at this level, because they're very hard to get on, and they've got very busy people and they've got lots of time, so it is difficult to get guests on. The more I get known for doing this, then I'm going to get the quality of guests like Richard on there. So I hope you all have a good time, your business is doing well, and don't forget, guys, don't get left out in the cold.